Okay, okay, write this down. Now we are discussing section 50C. So normally here the problem is there is something called as stamp duty value. Let's just say stamp duty value is 50 lakhs. Like stamp duty value is decided by the authorities only. Stamp duty value is decided by the government itself will decide, like based on the market, based on the area or the locality where the property is located, they will decide this is the rate for this. Okay, and you have to pay, like if your stamp duty value is 50 lakhs rupees, you have to go to the register office, you have to pay stamp duty rate on this 50 lakhs. Okay, but what people will do is people want to decrease the stamp duty rates, stamp duty charges, and people want to decrease the long term capital gains. They might transfer, okay, they might transfer at a lesser price. Let's just say 10 lakhs only, right? The value of the property according to the government is 50 lakhs, but you are transferring, the full value consideration is only 10 lakhs. Okay, so if the government feels that if there is any transaction is happening like that, even though the FVC, that means full value consideration, the transaction is happening at 10 lakh rupees only, but we will take SDV as the FVC. This is we called as deemed FVC. Okay, deemed FVC. So this stamp duty value will be considered as a deemed full value consideration. Okay, now when does this will happen? When does this happen? Condition 1, we are discussing about section 50C. Condition 1, assessee should not be in a real estate business. Like you can say assessee should not be a real estate dealer. Okay, then condition 2, it should be about land or building or both. We are talking about land or building or both. And then condition 3, SDV, that means stamp duty value, is greater than 110% of full value consideration. If all these conditions satisfies, okay, all conditions satisfy, then only the section 50C is applicable. If all conditions satisfy, then we will take SDV is equal to deemed FVC. Okay, SDV will be considered as deemed full value consideration. Understood, guys? Now there may be a situation, this also, like normally we can discuss this later, but let's write it anyway. There may be a situation that there may be a dispute between the assessee and the valuation officer, right? Like the government is telling the stamp duty value is 50 lakhs, and then assessee is telling though no, it is not 50 lakhs. Okay, that means authorities and assessee, right? If there is a dispute like that, then we can go to the valuation officer, right? If there is any dispute, then we can go to the valuation officer. Let's just say stamp duty value is like 100 lakhs. Okay, full value consideration is, let's just say, 80 lakhs. Now according to what is the condition number 3, just now we have discussed, SDV should be greater than 110% of the FVC. So 80 into 110%, it is 88. SDV is 100. So SDV is greater than 110% of the FVC. So that's why authorities will say that even though the transaction is happened at 80 lakhs, I will take FVC is equal to 100 lakhs. Okay. Now our assessee is not okay with that. So that's why he will go to the valuation officer. Now what does valuation officer can do? So valuation officer decides something called as fair market value. What is fair? Like he will decide it. Now whatever he decided, that we call it as fair market value, and then that whatever he decided, a fair market value is less than SDV. Okay, or fair market value is greater than SDV. So according to our example, like he decided fair market value is, let's just say, 90 lakhs only. He decided only 90 lakhs. Like, the government is saying, the authorities are saying SDV is 100. Like at this price only the transaction should happen. But the valuation of officer is saying for this property 90 lakhs can be fair. Then if this is the case, then we can take fair market value or full value consideration, whichever is higher. Okay, what is the full value consideration in our example? 80 lakhs. And fair market value decided is 90 lakhs. We can take 90 lakhs, whichever is higher. But sometimes, the authorities are saying 100 lakhs. But the valuation officer saying, no, it is not even 100 lakhs, it is 120 lakhs. So he is deciding more than SDV. Then we will take SDV only. It's like, it's like the reason we are going to the valuation officers, we are not okay with the government authorities. Then he is deciding more than authorities. So then, okay, we will fix with the authorities value only, which is SDV. Is this clear? And the similar section will be there in PGBP also. So here it should not be real estate dealer, right? What is one of the condition is he should not be, assessee should not be real estate dealer, and if he is a real estate dealer, it will be there under the PGBP. Now in the previous question which we have done, if you see in this one, section 50C is applicable or not, we can check. Condition 1. What is condition 1? Just now we discussed. Assessee should not be a real estate dealer. Yes, in that question is not a real estate dealer. Condition 2. It's about the building or house property. Yes, building. Then as SDV should be more than 110% of the FVC. Now SDV is 13 lakhs. So 110% of the FVC. So which is 14 lakhs is the FVC. See, this does not come only because SDV is actually less, FVC only more, right? So 14 lakhs into 110%. So 14 lakhs into 110%, you will get 15 lakh 40,000. So which is SDV is 13 lakhs only. What is our condition? SDV should be greater than 110% of FVC. 110% of FVC is 15 lakh 40,000, right? SDV is only 13 lakhs. So this condition is not satisfied. So this section is not applicable. 50C is not applicable in that question. Now this question will explain a lot about the section 112A. Okay, are you guys understanding or not?
Yes, understood.
Sanjana, yeah. Rajan provides you the following details with regard to sale of certain security by him during the financial year 2018 and 19. Sold 1000 shares of A Limited on 5/4/2018, 650 per share. A Limited is a listed company. These shares were acquired by Mr. Ranjan on 5/4/2016, 100 per share. STT was paid both at the time of the acquisition as well as at the time of the transfer of such shares, which was affected through stock exchange. And then these shares were traded. They have given the prices. Okay, now this is the first one, and then again the second category is something else. Okay, now let's deal with the first one. Again, the capital asset which we are dealing with, listed equity shares. Listed equity shares. Then we have to discuss about the period of holding. When did we buy this? We bought this on the shares were acquired by Ranjan 5/4/2016, and then we are selling on 5/4/2018. Now tell me, listed equity shares 12, 24, 36, which one?
24.
Listed equity shares 12 months only. So the obviously the period of holding is more than 12 months. So we will classify this as long term capital asset. Now once we classify this as long term capital asset, two sections 112A and then 112. So first we need to check 112A whether it is applicable or not. Now what are the conditions for 112A? When does 112A is applicable? Yeah, so you see these are the conditions: condition 1, condition 2, condition 3, condition 4. The transfer should have happened after 1/4/2018. Satisfied or not? When did the condition transfer is happened? 5/4/2018. So the condition 1 is satisfied. What is condition 2? Sorry?
So all the conditions are satisfied.
Satisfied, good. Condition 2, it is a long term capital asset. Condition 3, what is condition 3? It should be a listed equity shares or units of equity oriented fund or business trust. In this case it is a listed equity shares. Okay, then STT paid both on buy and sell. Yes, they have mentioned in the question, it is paid acquisition as well as the time of the transfer. So all the conditions are satisfied, so 112A is applicable. If 112A is applicable, right, what do we need to check? We need to check cost of acquisition, right? So for the cost of acquisition, again we need to check this part. Is the date of acquisition is after 31/1/2018 or before 31/1/2018? When did we buy the shares? We bought the shares on 2016 only. That means the date of acquisition is before 31/1/2018. So we need to take the cost of acquisition whatever they mentioned in the question in the 112A section. So they mentioned you can take actual cost of acquisition or least of the following: FMV on 31/1/2018 or FVC. Okay, we have to take whichever is lower and then we have to take whichever is higher. This is what I have written here, this part, like 1 and 2. This is what we have written here. Now let's see here, what is actual cost of acquisition, at what price we bought the shares. We bought the shares at these shares were acquired by Ranjan at 100 per share. So this is the actual cost of acquisition. Okay, FMV on 31/1/2018. So they have mentioned here on 31/1/2018. They have given 3 prices though. Now which price we need to take it is the question. Okay, so they have given here 300, 290 and 280. Okay, so then we will take whichever is the highest price we can take. Just a second. Yeah, take the highest price. What is the highest price? 300. Okay, what is FVC? At what price we are selling this? 650. Okay, so 650. We have to take whichever is lower, like in this one, whichever is lower is 300. Then again you have to take whichever is higher, 300. Okay, so the 300 is the cost of acquisition. Any doubt on this, or do you want me to write it properly here, or understood?
So understood.
Yeah, good. So the first we have taken here whichever is lower, which is 300, and then we have to take is whichever is higher, which is 300 again. So now we got the cost of acquisition. Now let's follow the format whatever we write normally, right? So to the question number 5. Okay, so full value consideration is equal to, if you see how many shares we have, 10,000 shares, and then we sold it at 650 per share. So 10,000 into 650, you get 65 lakhs minus expenses on transfer is nil. Then you will get net sale consideration, which is 65 lakhs. Then can I do indexation for this? I have a cost of acquisition, right? Just now we have found out cost of acquisition is what, 300 rupees. Can I do indexation or not? Yes or no? Sanjana, yes or no?
Sir, no.
Why not? If section 112A is applicable, no indexation benefit you can claim, and no chapter 6A deductions you can claim. Okay, and no rebate under section 87A you can claim. Remember this. Whenever section 112A is applicable, you cannot claim all these things. So section 112A is applicable, so I cannot claim any indexation benefit. So 10,000 into 350 I will do. So I will get, 300. So 10,000 into 300 I will do. I'll get 30 lakhs. Then I'm gonna get LTCG under section 112A, 65 minus 30 lakhs. I'll get the answer 35 lakhs. 35 lakhs. Now tell me, what is the tax rate under LTCG? Sorry, this section 112A. What is the tax rate? In yesterday's notes it is there. 10%. Very good. So, and also can I claim the 1 lakh exemption? 35 lakhs is the total LTCG. From that I will claim the 1 lakh exemption. So 34 lakhs into 10%, I need to pay 3,40,000 rupees tax. That's all. The question is over. Okay. Now